Hey, this is Leo. If you find the content valuable, please subscribe. So, a lot of weird things happened yesterday regarding AMC. So, we're going to try to dive in and dissect a lot of these and try to kind of figure out what's going on. One of the weird things that had happened, and this is what I initially thought a lot of people were talking about in regards to options and whatnot. A friend of mine ended up getting a margin call yesterday on his cash position for longs. So he didn't have any margin being used. In fact, he had turned off the margin. The broker then turned the margin back on, and they were demanding $40,000 or they would liquidate his position. So he ended up calling them. This is ridiculous. This is a cash account. These securities were purchased on with cash. There's no leverage being used here. Why am I getting this margin call notification? So it was very strange. They ended up removing the margin call. They claimed it was a glitch. I think a couple of other people had the same issue. I'm not exactly sure. All the other things that kind of happened in the market kind of overshadowed that. So just very weird. One of our theories was that, we wonder if they are going to, if price increases, that they're going to claim that, okay, there's a margin call for people that aren't margined, and they start just liquidating and selling off people's stocks, which, I mean, obviously that's highly illegal. But he and I were kind of going back and forth talking about if that was something they could do. I mean, theoretically, they could do anything, it's just a matter of the consequences they would have to face down the road. I don't know. It's just very weird. Hopefully that's not something that they do to try and stop the squeeze. But, I mean, again, anything is possible. I mean, I don't know. This is uncharted territory, We're dealing with fraud and manipulation. So, in regards to the Halt, I see a lot of stuff going on, just people talking about, the Halt is market manipulation. I haven't seen anything that the Halt would be market manipulation. We can go in here and, I'm not the sole authority on this. I could be missing something. But in general, market halts are done because, it's like what we've talked about, how whenever your emotions get high, you can't think rationally, etc. So, for example, if price is just going up, and you're not having time to think, the purpose of them, or if it's the opposite and price is just dumping ridiculously fast, the purpose of a market halt is to pause the market, allow traders to gather their thoughts, do a little bit of research, figure out why the price is reacting this way, and then make a logical decision. That's the rationale behind it. It occurs, circuit breaker halts, which is what we're talking about. They occur across all kinds of stocks for all types. If the market moves up or down more than 10% within, I believe it's a 5-minute period, then they can trigger a circuit breaker halt. From my understanding, some people were asking me, okay, so it was triggered on the way down. Why wasn't it triggered on the way up? I tried to do a little bit of research to find an exact rule to kind of explain it a little bit better, but I couldn't really find anything. But my understanding of it is that at the open, and I see this all the time with futures trading, that at the open you can have some fairly extreme volatility. And so right at the open, typically, I believe there's a little bit more margin, so a little bit more room that they allow right at the open. And so that could be why we didn't see a halt on the way up, is they give it a little bit more breathing room because a lot of volatility at open is expected. And then, a few minutes have passed and then it just starts to dump. It dumped, if we look here, it dumped 15% within a 3-minute period. So, that's a pretty drastic move down. I'm also not really understanding why people are claiming it's manipulation, since the momentum that they stopped was selling pressure and the price is going down. Somebody had mentioned that, well, they wanted to prevent SSR from short sale restrictions from being triggered, but I believe the prior day's close was 29.31. So if we come over here, 29.32 is close enough. So 29.32 going down. Well, they stopped trading here. Where is it? So they halted trading here. So I mean, that's not really what would trigger a SSR. SSR gets triggered at any point during the day if the security were to fall 10%. So I mean, maybe if we got closer, but from the previous day's close. So if it falls 10% from the prior day's close, that's why we're looking at 29.31. You would just measure down 10% to come up with that. So I mean, we weren't really close at all at that point for to prevent SSR. So that doesn't really make sense to me. To me, it just looks like a regular market halt. I don't see why. I don't see how it would be advantageous to them to prevent the stock from dumping down further. That, and I mean, just the fact that if they were going to do a halt, you would expect that they're going to do it as price is increasing, because as price is increasing, that's what's putting more pain on them. You wouldn't expect them to try to manipulate the market by halting it on the way down. So that's my thoughts there. As far as the in the money calls, a lot of people were getting notifications that, my calls are in the money on GME, for example, that, they're saying that the strikes are $500 and that they're in the money, et cetera, et cetera. And then we were getting reports that the ask on, I believe it was AMC and GME, that it was showing as 600,000. So the bid and ask it's the difference between what someone is asking for a share and what someone is willing to bid for a share. So what I think happened, and what I think makes the most sense, is that, because my understanding this happened around the halt. So as they come into the halt, typically halts, another reason is not just that it's moving quickly, but they halt the market because there becomes a lack of liquidity on the books. So if there aren't enough orders on the book, meaning that the bid and ask spread has become far too wide, they will halt and allow time for people to submit orders, because sometimes the price can just move too quick and people don't have enough time to submit orders. So if the bid and ask spread gets too wide, that's another reason that causes a halt. But what I think happened is that for a moment, there was just a massive lack of liquidity on the books, and somebody somewhere has an order to sell at 600,000. That's what that's showing. So it doesn't mean that the price actually got there. It just means that somebody out there is asking 600,000 for a share, which, I mean, that doesn't surprise me. I mean, we see people talking about that all the time, that, they're, that they want to get these really high numbers for the stock. So now I don't claim to be an options expert, but this could explain why people were getting in the money calls, saying that their calls were in the money, is if they base that on the bid-ask spread. Typically, like, the bid-ask spread is supposed to be very tight, within a few ticks. So if the bid-ask spread for a moment is showing that people are asking 600,000 per share, and the calls are looking at the bid and ask to determine what, where the price is, it's possible that, or at least some of these brokers, that's how they're doing it. It's possible that their calls were being viewed as being in the money because the ask for a moment was at some $600,000. It doesn't mean that they were actually in the money, but it created this little glitch where if, if the ask is 600,000, then okay, well, that's obviously above 500 or 300 or some of these reports that we're seeing. That's the only logical explanation I have for it. If there's something else that caused it, obviously that's that I don't know. I don't have an answer. But that's the only thing that I could kind of piece together as to what would cause that. It's very strange that we see all of these glitches going on with AMC. So the other thing was NSCC 010. Some people were asking me, some people were claiming that that's transparency, which to my knowledge, that is not transparency. All that is that's the pawn shop rule that allows the DTCC to come in and seize other securities and whatnot that hedge funds might be holding as collateral to essentially pay for the squeeze. That apparently was revoked. It doesn't really change anything in my opinion. If they're going to get squeezed or if they're going to get margin called, it's going to happen. We're due for a big market correction, a market crash going into a recession. So, it doesn't really change anything in my opinion. Yeah, maybe the market might take a bigger hit for it, but it's, I don't know. It's not really something that I'm all that concerned with. It doesn't have anything to do with transparency. It's just kind of a nothing burger in my opinion. Yeah, so nothing really going on there. All right, so now as far as price, as to why we stopped where we stopped, well, if you just look at the chart here, we ran into resistance. That's exactly what it is. People can say, well, this reason, that reason why we stopped, but if you just look at the chart, a lot of people, they look to news for trading. In general, I don't really pay attention to news much unless it's some high volatility type event like FOMC meeting. I'm usually out of the market around that time because I believe that it's almost as if they write the news to match the price action. So for example, price is coming down here, you see it stops, it's holding as support this entire time, lots of touches here, right? So now we finally get through, we come back, we test it here, and then we pull away. And now as we're coming back through it, we see it holding as resistance. So it makes a lot of sense why price would stop there exactly, being that horizontal resistance, and you have a low volume node off on the volume profile. Makes a lot of sense why we stopped there. And now people, after the fact, they come up with all types of reasons as to why, but really what I'm seeing is it was just resistance. That's all it was. We need to get through that resistance, and then, it's more or less clear skies once we get past $50. It's pretty much just smooth sailing. So going down to a smaller time frame, let's find out what the computer algorithms are doing. Let's see here. So again, just starting from the low of this move, pulling up, we can see that they began buying here at the 50. Look at that, exactly to the 50%. They got their target here at the negative 236. Price pulls back and they take the next move. So just pulling from where they previously purchased to the new high, you can see they began buying at the 50. Price runs up. They obviously got their first, second, and third targets here. So again, pulling from where they bought previous to the new high. Right there, you can see it went exactly to the 50 like it always does. And then they got first, second, and third targets. So then what are they going to do? They're going to do the same thing. They're going to pull from the 50 up to the new high, and they buy the 50. So now they're targeting the negative 236 up here at, call it $38. So that's their next target for this measured move series. But look at that. Exactly. Buying at the 50 right there. Exactly. Every single time. That's computers engaging. They begin buying, they load up their position, and then they hold until they get to the negative 236. They made their profit and they exit the market. It happens across all securities. It's just, this algorithm is predominantly what makes the markets move. So I think that pretty much wraps up this video. As far as where we are now, it just shows a little bit of congestion. If you look at the daily candle, one sec, I got to get these off of the chart. Yeah, I mean, that candle there just looks like congestion to me. It's not bearish. It's not really bullish. You know, we saw a price push all the way up here. It was rejected and pushed down. And then we saw a price try to go lower, rejected and come up. So it's just showing congestion. It's a range. If you break this candle up, you would just see a range within a smaller area of price. I'm really not going to be concerned unless we start breaking below the 200 EMA again. Yeah, so we're still on the outside of the Bollinger Band, so you know, I mean, it's looking good. You know, we just have to kind of wait it out. It's going to take time for this to play out. Anyway, until next time, I'll talk to y'all soon.